welcome back to the channel. In today's video, we're going to go over why having a daily trading bias is very important. Sometimes everything could be setting up against your trading bias, but having that daily trading bias can keep you out of taking a losing trade. I hope you enjoyed the video, and please click the like button before we get started.
All right, so this trade is on Meta, and it's a 5-minute opening range break, and it's a bullish 5-minute opening range break, which means the position is long if you're new to this channel. So this is the reason why having a daily time frame bias is very important. All right, hopping into the daily chart on Meta, the day that the trade was taken on is right here. So the Friday before I took this trade, the weekly chart broke out of this wedge. So knowing that the weekly had just broken out of a short-term wedge, my bias going into Monday is bullish continuation because I'm expecting the stock to head towards the longer-term trend line. So if I'm going to trade Meta on this day, it's going to be bullish. Now, I'm always willing to pivot with momentum, but the market's looking strong. The stock gapped down right before open, but hopping into the exact trade, let's take a look at what happens. Looking at this right here, right before open, you get this monster sell-off. Now, anybody looking at that is going to think about weakness, but that's not the way I look at it and not the way I trade. I trade based off human emotion and where I think traders are trapped. There wasn't much buying going into pre-market, so there's not really any trapped buyers. Now, is this people taking profit or is this somebody entering short positions? One thing you'll notice a lot right before open is a stock will sell off like this and then have an extremely bullish day. And I don't know if it's manipulation. I don't know if it's meant to trick people into, shorting the stock, but the bullish bias I have on the day keeps me from taking this pre-market break, and it also keeps me from taking another bearish setup. Now, if I play the trade and just speed it forward a little bit so you guys don't have to watch, look at the bearish engulfing start to set up on the 5-minute time frame. The low volume on Meta today makes me trade a higher time frame, like the 5-minute. I'm not going to be trading 1-minute orbs, 2-minute orbs, so I'm not risking getting reversed on when something like this happens. I'm not taking short positions again because my bias is to the long side. When the trade ends up actually setting up for me above volume weighted average price, back up to towards the 9-period moving average, my thesis on the trade is there's going to be a lot of shorts trapped underneath the volume weighted average price, trapped in the pre-market consolidation. And if we get a break over this, a break over prior day close, which is this line right here, this trade is going to be a great bullish uppercut orb. Let's let the trade play out so that you guys can see what actually happened. I'll speed it up so we don't have to, sit through the whole thing. This is a 5-minute time frame. There's my first entry. Okay, I tried to get filled at volume weighted average price on a lower time frame, so it was a bit of a bad fill. Luckily, I was piecing into this position because it was a bit choppy at open. There's my next fill. And now as we begin to break over the volume weighted average price and head up towards the 9, I'm in for full size position, as you can see. So I am in full size. Now that I'm in the trade, I've identified my take profit and my risk point. My risk point being under the close of the candle I got in on, and my take profit being 3-1. So I'm looking for about 170 on this trade. I'm not interested in anything above 170 because I know that 170 is a psychological number where people could take profit. I also know that 170 is around where the high of the pre-market range was. I'll also start to look to get out of this trade if it starts to pull back under volume weighted average price. Therefore, I won't take the full stop out on it, and I will secure some profits. So as we get close to the 170 area, I am going to look for the momentum above it, and I'm going to take profit. There we are, moving up towards 170. Always make sure you're watching the level 2 to see if there's any type of wall that this stock needs to get over to break that. And then boom, as we break it, as the momentum gets over 170, I'm out of my position. Hindsight 2020, Meta ended up going to 171, but given the choppiness of the market, I wasn't going to hold any partials. I was going to take my money and run. And that, as scalpers, we take the momentum in our favor and we get out. I hope you found value in this video. I hope that you're able to understand my thought process when I take a trade and the importance behind having a long-term bias. If you're interested in learning this trading strategy, you have to click this video right here because it will absolutely 10x your profit. Tap that subscribe button, hit the bell notification so that you can stay tuned for future videos, and I will see you on the next one.